first off, they said to me, would you like to write? We have a lot of brokers write in this, and that's like, to me, that's absolutely not what I do. And so the guy started off asking me if I would do that, and it came across a bit, this came across like a journalist, and I'm, they do deadlines and they want you to have formatting and all that sort of stuff in a particular way. And I said, I don't know if this is going to work, to him and myself. And then he asked me to do it today, for today, and I rang up this morning. I said, look, I just can't do it. It's really, I looked at what they did on the website. It's really not my gig. It's not the way I do things. And basically, first thing they do is they want you to write for something that's a week out. So you put the information on a Tuesday and it comes out the following Monday, which to me for a website sounds peculiar. But anyway, I said, I sort of said, I'll probably do it. And this morning I rang up and he said, oh, look, I really shouldn't do this. And it was the busiest day on earth. Sam seemed to pound me with thousands of long-term questions about millions of stocks. Got a lot of questions, and I had to go to lunch with the APTA meeting. And anyway, basically, this is a time of the year where anything that can go wrong will go wrong. And today was just a busy day. And Steve, if you're in the room, then congratulations. I can't see you in the room. I don't know why. But it seems as if you are in. I appreciate you being in. And if anybody's having a month or week like that, then it's not just me, I hope. So, can you see the screen okay? Beautiful. Welcome to the Forex Forecast. Now, I detect that everybody is really a bit too fond of the US dollar at the moment. That's just my opinion. Could be wrong. So I haven't got... Here's a disclaimer and warning. This is prepared by Ideal Financial Group Proprietary Limited, corporate authorised representative number 299753 of Aruda Proprietary Limited, AFSL 338674. So for me, we're seeing some pretty extreme moves in the Forex, and this is planned, but the US dollar index just ain't been moving. This is general advice, does not constitute financial product advice, and does not take into account your investment objectives, financial situations, or particular needs. You should look at the FSG and the PDS, and you look at it from i-deal.com.au prior to investing or trading. Now, all of this is, we've tried the best to make sure that this is good information, but we can't be held responsible for anything. Any errors or omissions, there's no warranties. Really always trade with a stop loss. There's no guarantees. Anybody who thinks a financial advisor is going to give you the perfect advice in the world is completely needing medication, or is on some very good medication, probably magic mushrooms. Anyway, derivative trading may not be suitable for you, and you should understand the risks involved. Forex, commodities, shares, CFDs, all involved leverage, and that can increase your profits if you do well, and if you do badly, it can increase your losses and hurt you financially. So always consult a licensed investment advisor before making decisions, and blah, blah, blah. So let's look at some foreign exchange Forex waves. We have no reversals to the downside. We have the Aussie Kiwi and Aussie US as a chance to buy dips. And let's go in and see if we can milk this one for anything interesting. This is the US dollar index, the DX, which you can see here. It seems to be trading back down again today after trying higher. This is a pattern. If you are long, I want you to reduce your stop loss to 97.60. If you are short, and if you are long, I want you to raise your stop to 96.86. Currently, I'm sitting in a little bit of a short position on the US dollar index. It's against this flag. I've just tightened the stop loss on that. So let's squiz at the Kiwi. So this is the Kiwi on the daily charts. It's been going now on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, something or other. And where was my target? We had a target to 70.31. Let's look on the monthly charts to get some clarity. And we can see here, boom, smash. Now, what they did last month is they stopped being nice to overseas investors, as nice as they have been in shares. And that's actually caused a collapse. On the flip side, what we've seen is the Aussie dollar against the Kiwi has improved itself, turning itself around over the last, since April. So all of this flood of Chinese money is now pointed at Australia. Now, reality-wise, the same thing that we've just seen in Australia, where you see price on application everywhere. That was in New Zealand when I was last there, and I can't remember whether it was Easter or whether it was Christmas, but the New Zealand property market was stingingly hot, like unbelievable prices, just like we are here. And what that did was that forced the New Zealand government to actually do something about people coming with cash who would normally be arrested and put in jail if they brought that much cash into the country. But they're doing that because they're Chinese. Nobody wants to touch them legally. Of course, we're all running scared of China. It's got lots of warships and all that sort of stuff. So we don't want to be mean to China, do we? But what we can see is 70.31 would be the best area to start to buy into the Kiwi on the daily basis. And there's a big juicy area at 69.55. So we're coming into that zone where it could be worthwhile thinking about a Kiwi position. Now look on the monthlies, and you can see here that it's trying to go oversold on the monthlies, but not quite. Let's look on the weeklies. You might see some sort of, there's a fourth, there's something else. I don't know what that is. We might go to look for a wave count, but we can see some clear divergence now going on the weekly chart and on the Kiwi. So I'm a Kiwi hunter. I know they're not extinct, and I was told they've got only one mammal in New Zealand. We also have a bit of a struggle street pattern going on here. So the Kiwi is something to be thought about as possibly being buy-worthy with a tight stop, but a little bit lower down. Now, quite frankly, the amount of money the Chinese are popping into going around the world makes me believe that they are spending money like it's not theirs. So I don't understand how I know that there's a lot of rich people in China, but why is this going on so much? I suspect that what's happening is the Chinese government is selling down its bond holdings and then feeding out cash to people to get rid of their problem in terms of the community services that they need, schooling, as well as rich people escaping from China in case things happen. But the sad thing for those people is they can't hide. They can't run because the Chinese government is full of spies, and they've been spying on us for ages. So if the Chinese that are there think that they're going to get away with it, they're not. It just simply isn't going to happen. They're going to be caught, and they're going to be prosecuted on one level, whether it's from Australia or the other, or from China. And in the end, this massive bubble that is caused. I was listening to Julia Lee to talk today, and I hadn't really thought about this, but she says, look, the Chinese can't invest really anywhere else, so they come here and buy houses. There's a few places that they can invest. They can invest in the stock market. Once they're allowed to invest somewhere else, the money is not going to be everywhere. It's not going to be in the property market. But our decision is, at the moment, Australia's winning the war in terms of attracting Chinese money. And this is because New Zealand tightened up, and because and because we are still a little bit lax. Yeah, we make a bit of noise, but the tightening up will happen at this soon in this phase, because unless Joe Hockey is completely indolent, which is highly likely, you will find that they're going to be forced to do something, because people are just screaming. Property prices cannot accelerate by $1 million. I mean, my property in just up in Vaucluse is now 30% higher in value than it was when I bought it in December. Now, that's just absolutely insane. Why should a one-bedroom apartment in Macquarie Park cost $1 million? This is just lunacy, and if our government doesn't do something about it, we have to do something about our government, because it's just not okay to have these external forces coming in and squeezing us out. And eventually they will fall away like the Japanese did, but it will hurt a lot, and it will be a really bad, ugly collapse when it does come. Anyway, at the moment, Australia is a beneficiary, and the Kiwi maybe has a bit more to go on the downside. We have divergence, but there's possibly a bit more on the downside, 70.31, 69.55, and then we go, how's your mother, and we're in. Now, the Australian dollar is also one of those on those lists. I shouldn't babble about property, but it's really the word on everyone's lips. And Australians cannot afford these property prices. If the Chinese were not here, and we had higher interest rates, the property would be just in the toilet. They'll be back down 50% in a blink of an eye, because they're not sustainable here for Australians in terms of our income. So Aussie US. Now, it is down in a bit of a basing formation, and we've been coming down so long, it's getting the bounce, which is a relief. It's finally hitting the bound. Where can it get to? About 0.7867. So I think the Aussie is probably better placed. Noticed here it's had a retest, a hard 2 weeks down move, and a rally above this point at 78.49. We'll see it still rally towards 83 or 0.8286, with a focus on 0.7960 as a possibility. Everyone went bearish the Aussie, and guess what? Even if it makes new lows, it will be diverging just like the Kiwi. So Aussie stronger than the Kiwi, that's fine. Kiwi, if the Kiwi bottoms, then they'll both be a good thing. Now, let's get moving. We have no continuations up. A continuation down is found in the USD CAD, and we don't often bother to trade the dollar CAD. And I think this is misplaced. Notice there's a couple of double tops, and on a bigger picture we could get to 134.62. I think it's going up on this pattern, and even if it goes down, you'd be a buyer at 1.16 or at 1.1811. At the moment, if you want to be long, I think it's okay with a stop loss below 120.77. And if you want to be short, your stop loss needs to be 126.43. So I think there's possibly more to go in the dollar CAD, and that would be similar. Now, here's some trades and dates. The Aussie US is a buy around the 14th of June to the 18th of June. And that's about it. Now, I'm going to run through a few of the. I want to run through what's going on in the yen. as you may have seen from the emails, and the dollar yen. And I'm going to pick up, and I'm going to bring out my magic wave counting machine. And a few weeks ago, I was talking with a gentleman, teaching him a few things, and he was interested in trading currencies, so we talked about the dollar yen. I ended up giving him a target at 126, and today he's asked me, what do you think? Notice here that we've got 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3. This is almost textbook Elliott wave. Now, it's so textbook, it's disgusting, right? Here's your text, here's your fifth wave. So we got a nice fourth wave move here. We got a nice fourth wave move here. 126.59 is the target. What we need to do is to rock down to the lower time frame and see whether we got a little triangle in this pattern. So we're in possibly the fifth of the fifth of the fifth. And how we can find out is we can actually go and create a chart. Let's do it, see if we can do this on a 60-minute chart. Oh, well, that's a bit annoying. Okay, I have to create a new chart. And we'll look at the JPY, a 0-FX, and we're going to look at on a 60-minute chart and see whether the machine will actually come up and do the goods with us. So how's everyone going? Are they having fun in the markets today? You have fun in the markets today? Steve, I see you in here. Fantastic. Richard, Gary, Judith, Julie, Kim. Hope you enjoyed this seminar. Teresa, how are you going? Tony, Wes, Ziggy, Aja, Cindy, Erica, Jonathan. Right, we had you up early this morning doing currencies, and we got you up late doing currencies. Yes, good short and BHP, fantastic. Sorry, Ziggy, I didn't say good evening to you. Earlier I did just see that. Okay, this is saying fifth wave, which is what my impression is. This is the Japanese yen on a 60-minute chart, and we're getting a struggle street pattern. So we got 124. So possibly there's one more blow off up towards that target area, 126.55. And then we get serious. What I would say is you want to be cautious, and we actually have a PHG trade short going on with a stop loss below 123.37. And that's I think that we should be looking for the reverse trade now in that one. Okay, so cautious of that. I can see someone's in the ER room, so who's in the ER room, I'll just wave and say hello in there. Anyway, whoever's in there, say g'day. I don't know. Somehow it used to be able to tell me who people were in there, but wave at me if you're sitting there enjoying the ER room. So you can see it going off its brain in terms of price changes. It does so many price changes, the computer just has a heart attack doing it, keeping up with it. So yen, dollar yen, we're in strange territory. It's getting towards some of the bigger targets on this time frame. 125.59 is one of them, and 120. Even 127, but we're seeing that pattern of a struggle street may give us a reversal. Okay, let's do, is there any currencies that you want specifically to have a look at? I mean, I covered this last week in the currencies, so this is probably why I'm running through. I want to do a wave count on the dollar index. That's probably the most productive use we can make of our time right now, if my computer doesn't die on me, because I'm working it a little bit hard. They do get a bit precious these days. Okay, so let's look at the dollar index, hash F, and see what its wave count is. And I'm going to do it on an hourly chart just to see, because I'm watching what the reactions are going on in the dollar index. We notice this little flag here, and that's the monthly charts, and it's now trading 97.07. See here, we've come to the weekly charts. It's popped a little bit higher, but it's not quite going long. See, that would be at 97.78. Now we drop down onto the daily charts. We can see that, yes, I told you to buy it on a PHG, and your stop was here. Now I'm going to tell you to raise your stop to 96.97 if you are long, because it doesn't seem to be working that well. A drop back down towards 96.08 would be a reasonable spot. And the reason is this lacks the rule of alternation, and also there's a 61.8% retracement, or actually a 2/3 retracement, which is GAN. And dollar index, I think, is a cracking, would crack below 96.70, looking for 96.08. So I'm sitting short at the moment. Now, I haven't made it a PHG trade, but if you do want to go in, your stop needs to be about 97. I reckon around 97.50 is okay by the way that it's been trading. Do we have any currencies we want to have a squiz at? I want to have a look at the dollar index now, and we'll get moving on to commodities fairly quickly. Again, it's nice to do these quicker rather than slower, and hopefully you pick up my speedy progressive thoughts. Now this is a dollar index. Notice here that it said it finished its fifth wave up on this point, on wave 5, on this red time frame. And what it's done now is it's gone A, B, and where the hell is C? It's lost its drive. A, B, and C. So at the moment, it's playing, C would be down here. At the moment, we've seen ABC, XW, ABC. It should be a reasonably fast move down to 96.70 or possibly down to 90.53. Everyone's talking about how strong the dollar is. It's just not going to happen as easily as that. So I'm curious, and I think it's unhealthy below 96.70. That should break it and bring it faster down. And if this is a C wave, we're you're in the fast down move part. Let's have a look at how it's moving. And remember, this is an hourly chart. A, B, C, A, B up, and then C fastest down to here. 96.51. Okay, is there any questions about that? And that should help the Aussie dollar, should help a few other things. Do we need a quick, anyone need any quick wave counts on any currencies? The euro. Okay, cool. Let's play with the euro. If the machine is willing. Spirit may be, but the machine may not. Okay, so EUR 0 FX. And you want a 60-minute there, Erica? Let's play, just for clarity's sakes, let's play at the hourlies first. Sorry, the dailies first. I'm being vague. I'm sorry. Because when I look at this on the euro, I see it not going down. So here, there's this big rush up. Yes, that's possibly a triangle, but this expander here reminds me of, say, a corrective pattern, maybe a B wave. So I get pretty excited about this if it can get above 1.110. And remember, there's lots of positions built up, and those positions will unwind themselves as they get closer to when they go on a break and enjoy themselves. There's a lot of people who've been short the euro. This one last drive down here, that shows a 5-wave structure to the upside on the dailies. Therefore, this wave here should be corrective. It's come back just a little bit over the 61.8% retracement, but we've got to look for strength at the moment in terms of Elliott wave theory, and we've seen A, B, C. I'll redo that for you on the chart. So this is A. That's ugly. A, B, C. And then whatever this is, we'll find out soon, but getting below this area here is probably a bad idea for it. Probably should use the spotter for this, shouldn't I? A, B, C. And maybe it goes A, B, C or something like that, but at the moment, this isn't really a triangle, it's more of an ascending triangle. So I wouldn't be surprised to see it pop up and the dollar to have some strength. Okay, now let's get to your order, Erica. See if we can see this. See how the 5-period moving average is moving up a little bit already? And this is, I know the charts here are a bit scattered and I'm asking it to do too much. This is the euro, which has only just decided to work. I think I might give it a breather without my dragon. Hey Warwick, how you doing? Haven't seen you in for a little while. Been away? Or resting? Now, see here it's gone third, fourth. Now, that's good, and it might be right. But my feeling is even if it's a fourth, it's going to spend more time churning. So there's the fourth wave, and maybe it goes lower, but I think there's more chance of it going up at the moment just because of the time of year. Now let's blow away a few of the machines that are working. I'll just try and get it to knock itself out. There's a lot of processing going on here. Every time it updates, it's got to rethink and recalculate. So third and fourth, yes, probably going down eventually, but I think there's more capacity for it going up at this point, just the way the sentiment is. Executive decision made. See you later. Okay. Let's kill that and get onto the commodities. Okay, so just have a better look at the euro. I don't think there is a better look at the euro. There we go. Things are calming down. Okay, I think I do want to have a look at the Kiwi. Don't ever install one of these stupid little iPhone, Android things. They're just horrible. Can't get rid of them. But the Android is pretty reasonable as a piece of software, or it was until the latest update of Lollipop or Jelly Bean or whatever stupid name they give to it. Okay, so we're going to do a Kiwi, and I just want to make sure I'm not being totally on mushrooms. Yeah, so as I was saying, the bull.com.au guy, journalist, asked me about writing for him. And I read through things that they say, and they all seem to say the same thing. They all seem to use the same chart. And I thought this just really doesn't seem like me to actually write in that. Probably be good advertising if you're a broker, but not. I always end up rejecting those sort of things. Doesn't, putting in 6 sells and 2 buys, 2 sells, 2 holds. You might not have 2 sells. You might not have 2 holds. You might not have 2 buys, and then having a full week out that's very strange. So I thought with a website you'd actually put it up really quickly, but it's got a 1 week delay. Not me, maybe it's good for brokers with this view that hold the same view every week, month in, month out. Okay, let's do wave 2. This is a Kiwi, wave 2. Now, this is good. Why is this good? Who's done my Elliott Wave webinars? Why would this be good? Why would this be good? No one got any guesses? Or slow typing? Well, first off, you can get in if it starts to reverse with a tight stop loss. And Mark is saying, good on you, Mark. Thank you. You saved my bacon there. Mark is saying wave 3 is usually the biggest move. So if this is wave 2, and this is correct, that's probably best proven above 77.20. But if it is, then it's got wave 3 on its hands of wave 5. So wave 3 of 5, and all these counting stuff is just beyond my own brain cells. But you could have some pretty extraordinary targets to higher towards 1.07, 0.9071, 1.26, which would be extraordinary. That would be a pretty big move. And if this is correct, wave 3 is coming. If this is the end of a C wave, then that's magnificent. Let's try another currency, which is across the pond from New Zealand, and that would be the Australian dollar. Is it yourself, is it? Let's see what sort of fun we can come up with. So the Kiwi, now the Aussie dollar last time I did this had a similar concept. Now, good, the Kiwi's gone. Give it a little bit of a time. And we can see here, unless it takes out 75.53, the machine thinks that it's got a target at 1.2386. This is the Aussie dollar, and it's going through account right now. And forgive me because this machine just it's just giving me a rude message. So top of the class, Mark. Mark spends a lot of time in the mornings waking up early and not enjoying the Queensland sunshine in winter, which he should be, and spends times on my webinars in the Forex and commodities section. Here, see what the Aussie does. Apologies for this, it sometimes blows its brains out. So here we can see this is a bit triangular-like, so that could be a B wave if the machine thinks, and this is a bit of a peculiar pattern. So, similar conclusion. Wave 5 up here, a wave 2 here, and then going 1, 2 for the rally and down for a 2 here now with an exit at 0.755. Let's expand this so we can get some more clarity. Notice here it's called this movement wave 1. Now at the moment, I'm conservative. I just think it might be a fourth wave target. So I'm happy to give it a fourth wave target. But at the moment, this machine thinks this is wave 2 and we've already had an impulsive move up. Does that make sense to anybody? It's certainly not what the world is thinking. Let's quick squeeze at the Aussie dollar before I do it to death, and we'll do it on the 60-minute chart, and then we'll get on. I was only going to do an hour tonight, but I just wanted to. I think these currencies at least need a snapback, particularly as the people who've got built up huge positions have unwound, starting to unwind. Now, the Aussie dollar is back at 76 cents. Fantastic. What this has done, this flips around your thinking when you go down to a lower time frame. It's saying this is wave 1, 2, 3, 4, 5, WXY, and this is really just a 2. Okay, so we know where our stop loss is. If you're long this, have your stop at 76 cents. And we want this short-term one to turn up, and that would be on a break above 77.09. So if you're an Aussie dollar bear, you need to change your opinion above 77.10. Is everyone hearing me? And who's in the is anyone in the Yep, okay, cool. So like everyone seems to be hating on the Aussie, everyone seems to be loving the dollar, they're hating on the euro, but it hasn't made a new low. So my suspicions are that the Aussie dollar has had the kick shitted out of it, or whatever word you'd use. The Kiwi may have a little bit more to go, but the Aussie is not as bad as you would think, particularly above 77.10. I've gotten so many people telling me how bad the Aussie dollar is. It's just like almost vomit territory. Okay, let's do some equities. I think the I still think what I said last time holds, and that's dollar index will go up eventually, but it needs to clear $121 index to be certain of that long-term love. The Kiwi, the dollar yen, also the same thing. So let's talk commodities. And I need to just remember, just to mark out this place. Can I ask anyone, have they gone into the ER room or just happy in the main room? So dollar index will go up eventually. Okay, let me pick these things up. Now, commodities, main room fine, cool. I have been told that some people with iPads are having problems with the main room, and that's sad, but that's unfortunately just something that we're going to have to live with. I also want to start crunching down the webinars, and just because I believe you can fast forward fairly easily these days through the recordings. Is that working for you? Let me know, because I just like to have to deal with one link per webinar, because it's just does my head in at the end of the night when I'm just tired after answering questions. So, okay, so here's the commodities forecast, and just remember, disclaimer and warning, it's prepared by Ideal Financial Group, CAR 299 753 of Aruda Proprietary Limited, AFSL 338674, and ADES Trading Proprietary Limited. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial FSG and consider the product disclosure statement issued and available from i-deal.com.au prior to investing. Minimum commission, interest rate, platforms, dividends, variation margin, and other fees and changes may apply. Ideal has made every effort to ensure the accuracy of information at the date of the publication. However, we can give no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, we accept Ideal accepts no responsibility for any errors or misstatements, negligence, or otherwise. Market conditions and assumptions may change without notice. All of this stuff you've read before, and I'm sure you can do it. The bonds still are causing me to pat myself on the back for this forecast. Sounds egoic. Everyone thinks I'm a tosser, I guess, but I like this. So down. What that means, when bonds go down, interest rates go up. Easy. Today we just had a Reserve Bank not do anything. I think that's the expression for therefore. So we've got the forecast that the commodities should start to be getting better. Middle part of the year is when it really starts in earnest, and we've seen very little sign of any real commodities doing well. We might have seen cocoa doing pretty well. We saw gold pretend to do well. We saw silver pretend to do well. We saw, I can't think of any great commodity moves. We've seen coffee falling down the toilet, rallying a bit now. But copper did better for a little while and then failed. It does have a bit of, I guess mid-June we'd think about it. Nickel, we're looking at seasonal patterns till the end of August to come into play. Are you talking ZL, so bean oil? It came up huge. It's relative. It is relative. Yeah, you are right, but its friends haven't been doing anything. So bean oil looks like huge on the daily chart, Erica. It's not so huge on the monthlies. Volume's been good, so that's probably your best bet. But there's so very few of them doing anything. We see the Baltic shipping index trying to jump up, and it did that. I would say that would have been a squeeze. Just there was a short supply of ships at that time, forced it up, and now it's gone back into the range. So there's not a lot of life in the commodities. Uranium is looking good. Iron ore, Chinese iron ore, I still look for that 58.80 area because it's done a nice retracement. We've seen that 58.80 is the target area. And that is probably corrective in nature to the end. Now, uranium is one of the ones that I think is interesting. It's coming off this base, which is a double bottom. And so I think it's got a bit of potential towards 37, but more likely 36 is the easier target. So, commodities. Crude oil has done okay, and energy prices have done pretty well. And we're still looking for the last hurrah up to $68 on crude oil. So energies are the ones that have been the best. Heating oil, though, not cutting the mustard much, as well as crude oil. Natural gas, been falling apart, like seriously falling apart, going from 315 down to 267 in short shrift. So it's probably looking to retest 250. And I'm doing this on the daily charts, but we see RBOB gasoline. This is one of the ones that is good because Americans like to go driving at this time of year, and they've got lots of roads to drive on, and they head towards 2.417. So it's called driving season. So the RBOB gasoline is the unleaded petrol, I believe, of America. Now, looking at 30-year bonds, this is the monthly chart of the 30-year bonds. Now, when you look back, you'll see here in 2014, there was 1 month correction, there was a 2 month correction, there was a 1 month correction. 2013, we had some down moves. We're seeing some much bigger moves on the monthly charts than we've seen before. It's my contention that the Chinese are getting out of US Treasury bonds. Well, it's obvious that they are. Now, I think that what they're doing is they're just feeding money to their people to go out and buy the rest of the world. And my suspicion is, like scarily verified by a place in Newcastle Street with the biggest satellite dish that you've ever seen. And teams of Chinese moving out of there, big teams. It's a beautiful property. I used to go to school in the next street. It's looking over Royal Sydney Golf Course. And he's got this huge satellite dish. Like, maybe it's needed, but like you got to think and wonder, how porous is the Australian borders? And China has got an extremely well-developed spy network, and their tentacles go everywhere. So the 30 years right now are on the touch and go. Notice these old tops here and how it rallied off those old tops last month. Getting below 153 is negative on these. Notice the volume is heavy to the downside. So I'd watch those Chinese holdings. They are cashing in, and it's cheaper to get people to vote in members of parliament. It's hard to know. This is will let people come up and take residence and then vote in Chinese. I'm trying not to be paranoid, and I don't think China really needs to try and take over the world. But there's tentacles going out, and we're being very loose with who we allow in. We don't even allow any, real checks on people as long as they've got $5 million, which so many of them seem to do. Anyway, 142 would be the target, and into this zone on there if it continues to break down. Now, when we look on the weekly charts, we just want to see if we're getting some trend. Notice here we're forming a triangle, so a breakdown below 152 is negative, looking for 146. That's the bonds. Down here it might turn into a buy there, but there's some damage going on. 1, 2, 3, 4, 5. Looking quickly at the dailies, and then we'll get to your 10-year notes. We see 145 target, but more reasonably about the 150 area, I think, or 150 if it's going to continue to the downside. At the moment, we've got a touch of divergence. So one more move to the downside and a failure to go on with the job would indicate a rally back up, potential 160, 160.27. Speaking of the 10-year notes, Go into the monthly charts. This is back from 1999. Now, curiously enough, there's been a change. The last decent top was in 2012 for 10-year notes. Now, when you look at the 30-year bonds, you don't see that. You see a new high. Why is that? Because they changed the coupon. And also they caused a short squeeze by making every swap dealer in the world have to put up the collateral with the Bank of International Settlements, I believe it's called, in Luxembourg or whatever, Belgium, whatever it's called, not Luxembourg, but Belgium. And so they've had a huge squeeze on those 30 years, plus there was a coupon change to make the price go up. Now, so really, long-term interest rates in the 10 years topped in 2012, and all we've had is a B-wave rally for the past 18 months. That's scary to think about. Had you thought about that, Erica? I don't know whether many people had seen that. I certainly hadn't noticed that until I just pulled out the chart, so that's just me. So breaking down below 125 gets negative for 121 and 119. So I'm not liking these 10-year notes at all on a further decline. So what can we think from this on the weekly charts? That crack of 124 is critical. We see a descending triangle of sorts, and I still want to be cautious about them. On a shorter term basis, I'll get excited above 128 and 30 seconds, but at the moment, it's still looking for 125 and 30 seconds. Not yet trending to the downside on the dailies, not yet trending to the downside on the weeklies, but certainly there's elements of weakness about it. And so many central banks holding so many bonds, they probably will be holding them forever. They won't want to sell them, but the Chinese are smart getting out because long-term interest rates are going up, and that affects the Australian banks seriously. So I did some things. Where are we going? What's the conversion again, ratios to decimal for ZN? And it's 30 seconds, and technically each 30 second is $31.25 US. I think that's what you're asking, Erica. Now, if you're wondering about how you would weight the two, there's a different calculation which is called, I think it's called duration matching, weighted average duration matching. I've got to pull out my bond trading days. That where you calculating how you would match a hedge if you were long the 30 years and wanted to hedge it with the 10 years. That's another calculation that's in my head, and I'm sorry for bringing that up, but that's something certainly that has been worked out. So we talked about, let's talk about the Aussie bonds. Would anyone like to talk about the Aussie bonds? Now the Aussie bonds are slaves to the Americans. What we see here is on the dailies, a return to this low around the 97.26. You'll remember I said to gamma hedge some of the long-term out-of-the-money options that I'd been telling you about. to have a look, and 97.12 is the target. So if the US bonds are going up, then Australian banks fund themselves off the US swap curve, and so that makes it more expensive for, sorry, if the US bonds are going down, interest rates going up, makes it harder for them to fund themselves out in the longer end of the curve, and that's where they've got their more predictable sources of funding and the costs of funding. So basically it's a bit of a scary notion for the Australian banks. That's not good, returning to this point here and failing. So we see a triangle here. We've seen a retracement, but things get ugly below 97 again, really ugly for the Aussie bonds. Let's have a squiz at the larger monthly charts, and hopefully my little wave trading thing come up. And again, Aussie 10-year bonds had this scoot down below 97, which was quickly removed, but it went down too far, too fast. This movement in bonds, once they get started, they do tend to keep on going. Here's where the bonds were back in 2009. They were down here. 2008, they were as low as 6.8% interest rates, and the interest rates were 6.8%. Now they've gone up to be something like, at the moment they're 2.8%. And that was in 2008. And I don't know when they started the quantitative easing. I was pretty sure it was 2009 March. And where does the Australian bond market like to live the most? Let's just remind ourselves where it has been and how much it would hurt if our interest rates were back at the normal area of 6%. That's pretty well normal to low interest rates that we'd experienced. Can the central banks let that happen? Somewhere between 6 and 8% would be a normal thing if investors don't want to own bonds. This is memory lane. 6 to 8%, that would be in here. 5% here, that's a long way away. So my big thing is fixing interest rates, even though interest rates in the short term may not drop. One of the markets that is really interesting me overall is the grains. We have bull horns warnings in the long term in a lot of the grains, corn, soybeans, but not wheat, I think. We can see corn is doing a retest, so a break above 3.78 is good for a move to $4.44, in my opinion. Things are slowing down a little bit. Let's go have a look at the weekly charts. So I like the idea of doing some corny things, and you probably buy a break above 370 with a stop loss below 350, looking for 444. This will work better, particularly if the US dollar starts to go down. Now, soybeans is one of the exceptions to this possibility for strength. I still think that it's got 907 on the downside as a target area, and a break above $10 would confirm that this is okay as a retest, and we should be buying it, looking for 1145. This point, I can't be so confident about soybeans. And we'll have a quick look at wheat, and I'm just running some calculations at the moment. We see wheat has been stronger than soybeans, and so I'd say wheat is probably the best candidate. And write this down, it's a PHG trade buy on a break above $5, add more on a break above $5.07. Stop loss would be below $4.86, looking for $5.43. If somebody could write that down and just send it to me in a question, that would be good. I feel like an octopus at this late stage in the night. Soy meal has been one of the, we've been targeting 284 on the downside. Now, as soy meal gets weaker, bean oil gets stronger, and soybeans can stay in the same place because they extract soybean oil from soybeans, funnily enough, and soy meal from soybeans. And if they want a lot of soybean oil, they produce a lot of soybean oil, but they also produce a lot of soy meal, which can depress the price of soy meal if you've got no excuses for soy meal. Does that make any sense? Who wants to look at gold? Let's look at copper first. Copper, 61.8% retracement. What does that mean? It's also a 38.2% retracement of this move here. Okay, so it's a 61.8 between there, and it's failed to get to those tops. So copper still has my horrible targets at 233, 208. Remember, I had targets sort of just around the 240 area or 250 area last time. It rallied down to 38.2, and it's not looking flash. Now, in terms of the next one, we'll have a look at gold. Does anyone care about gold anymore? Have I burnt the interest out of you? How could you get interested in something that has done so little for so long? Unless you think it's really low base ADX, which it isn't. Yes, it's not yet. Let's look at the monthly charts. There's no real letting up. $10.45, sorry, 1,045 or 891 is the area where, if you want to generationally buy gold, that is the place to buy it, looking for new highs. It's not up here. It might be in the middle here, but when you carefully look at here, you can see 1, 2, 3, 4, 5, but not enough 5. There's probably needs to be about another $300 move down from this 13.01 area, so that would land 1045 and possibly even 891. Okay, so makes it difficult on that one. Let's look at its partner in crime, and I think we're getting partner in crime is silver on some respects and platinum on others. They say silver is not a precious metal, but I like to doubt that. Copper says it's in wave 5 down. I've just done a copper one. Silver, it tried to pop its head up, doesn't know what to do. Let's go to the monthlies. This is boring, but a triangle which indicates down towards 14.53. At this time, we also want to have a look at soybean oil is the one that is in a end of fifth wave, so it's just coming up with some calculations. Sugar is also on the list, and rough rice is also on the list for starting some trend changes, looking for bargain hunts. We'll do platinum, and then we'll move on to doing some wave counts. So platinum retesting these lows, so it might be okay, but when we go get some perspective, let's see where it's been. That's the monthly chart for platinum, which is not inviting unless it breaks above 1215. and then runs to 1266. Above that sort of area, then you start above 1350, then you start thinking about gooder things. But at the moment, it is trending to the downside on the monthly charts. On the weekly charts, we see a declining volume as price is falling. So maybe the next little move down to couple with the double bottom over here. It's double bottom here, so it's probably reaching down towards 1086 on platinum. We'll run quickly through cocoa. Cocoa has had a good pullback, and it's now hunting season for cocoa because it's had such a good move. Looking down towards 29.89 is useful. Let's have a look at the monthly charts just to see what's going on. You can see that it layered on the old top, so we should be trying it in my dreams to about 37.75 or 38.91. And it's just gone long on the monthlies. So write this down, cocoa. Buy with stop 27 if you can afford it. Tactically, we can see break above $31.14 is useful. Into this zone somewhere would be the best thing to look for. Let's look at a wave count now on cocoa. Okay, now it's coming up with a similar wave count to what my head just did. And you can see here, it's got some big targets, 55, 49, 81. And at the moment, it's giving us a 1, 2, 3, 4, 5, which is fairly big out of a wave 3 purple. So there's some pretty huge targets in cocoa. And as they keep telling us how good cocoa is for us health-wise, we wonder. But there's big targets, really. When you look back here, 1, 2, 1, 2, 1, 2, 3. So don't be too bearish cocoa, and it's a very fine crop. Coffee, they can seem to produce a lot of different places, but I had a barber who was this Belgian guy who used to live in the Congo, and he had shrunken heads. He was a Cronulla barber in this little dim, dark alcove in off Cronulla Mall, and he had shrunken heads in the shop and all sorts of stuff. And he told me all about cocoa. It was an interesting dude. He used to live there, and his family used to make cocoa. And it really is a fine altitude product, and it needs to be certain climate and certain altitude, and so it's fine. And people love it, so they're addicted, and it's good. This is probably going higher. If you can get a hold of some, it's a good thing. You've got to defend it. So that's cocoa. What about coffee? Coffee is intriguing, of course, isn't it? People are seriously addicted to that stuff. I can't have it. I smell it. They I smell it, but I like the smell, but I actually find the taste pretty horrible most of the time. Makes me not a very Melbourne person, doesn't it? Or not a very eastern suburbs person either. But I just bounce around the ceilings. Now, let's do coffee. Coffee had a little bit of a rally, and we obviously have bought our PHG trade at 129 and 35 30 seconds, or 35, right? So we were looking for targets down towards 120 and 106. We've gone long on a PHG trade just because it's been overdone, and I would really like it to close above 130 now. Now, in terms of negativity, it shares my target at 100. And a lot of targets have been met. But anyway, let's just say that it's gone A, B, C, it's gone 1, 2, and if it wants to continue on this machine's theory, then 96 is possible, or 82 is possible, or even 36.2. Now, I'm not going to countenance those sort of things right now, because I don't think they're healthy to think about. Let's see if we've got something more inside here. And pull this up here. See here it's saying 1, 2, and notice this is A, B, C. So 102.6 is not a bad area for buying back because or getting back in, because it'll match these two moves. So we can have a try here with a tight stop. And just to talk about this on the KC entry, I entered 935. The stop needs to be really at 126.50. Okay, so if you trade in that, that's good. Now let's drop down into the weeklies. You can see why I'm tightening the stop now. I don't want it to run away against us, but certainly I'd like to see it break above 134.7. And on the dailies, we see here, that's the way to go. Has anyone got any great? The next one that I'd like to focus on is sugar. Now we're already long on a PHG trade on sugar. This is a descending triangle, which on the monthly charts, which is disturbing me a little bit, being long. But you can rally it all the way back up to 1311 on the top side. Let's go for a squeeze at the sugar count. See what the machine thinks. It thinks that good target's 1101. Okay. I'm going to do this on the dailies, see what it comes up with. Okay, is this corrective in nature? I can see a bit of a fourth wave here, so I don't think this is impulsive. This is impulsive, that's impulsive. This so far is corrective, so I wouldn't be surprised to see it labeling this as some sort of, it is labeling as wave 3, okay. Okay, So it's going to get unhappy if it breaks through 15. It'll probably have a exit there at 1360. Okay, so above 1360, this machine gets happy for higher. At the moment, it still believes that this is probably a wave 3 to the downside with $10.28 as possible. So what we'll do is we'll manage our stops pretty quickly to the upside in terms of sugar. Okay, $11.01 on the downside. But we see this reverse cross. At the moment, we are long, hoping for 1275 and 1352. Do we have any requests for anything else? Palladium for Erica. Oh, don't do that to me, machine. While it's doing its machinations, let's see what I can think about it. Monthlies. Palladium, obviously better than gold, but still not holding on very well to the old top. So probably get most excited above 807 with a stop loss below, say, 750 or depressed below 750. That's longer term. So we've gone, so this is a 4. This is 5 like in, actually ABC in nature, ABC. So you probably expect 680 or 720, 625 if it breaks down below that 750 area. Now what we're seeing here on the machine says this is wave 1, A, B, C. That's really disturbing wave count with 1, 2. So the machine's pointing down 2 towards 666 and 588. So you wouldn't be super at this point excited about it. If you're shorting it, stop is above 803, and if you're long, below 723 is disturbing for that side. Okay, so let's is there any other markets? We all know the cycles that I've forecast before. Looking for a low in early July and then a rally up into then coffee. We're in a bit of a reprieve area in this June period, I think, for a little bit of a rally with a low in October. Cotton, a low in August. We've discussed that. Crude oil has some of the legs, which we're seeing. Still think $68 is good. Natural gas, we're sort of in the mid part of the year. We've got to get ready for natural gas. That comes up as a short in a little while, and then we get to get some good stuff. Forget about that. Here's some commodity trades off the bat. Coffee likes to be short from the 22nd of May to the 3rd week of June. At this point, we're in a little bit of a rally, so another reason for tightening the stops. 10-year notes looking for long from the 20th of June to early August, possibly goes down a bit further. So look at the price levels I gave you. Natty gas, short 3rd week of June to 3rd week of July. So conclusions, nothing hugely conclusive other than or different from last week. And I think I should have, I think I saved the wrong thing there anyway. It's a bit irritating. So yeah, I realized that I'd done a Forex and commodities last week, but I also did a equities one this week. Okay. Just need to get my recording again and start this. And we'll just switch over quickly to it's good. Okay. Equities. Geez, I tend to sound tired when I do that. Okay, this one. Bang, bang. Now I had a couple of questions. I did promise a part equities because we did our equities last week. I'm just trying to get these all back. I'd like to be doing them all in one go, really. So a couple of questions I got from Cindy was, is it time to get into the banks or is there another 10% to come? Let's answer this by killing a few of these close. Let's look at the bank charts now. And let's look at it simply on a monthly basis for Westpac. And if you remember, what's happened recently in Westpac, Westpac has been unfortunately not doing as well as even ANZ, which would appear to be a bit strange to most people, but that's what they've been doing. So this is a monthly chart of Westpac. It's closing this month, which is not over yet by any stretch of the imagination. And just before I do this, here's our quick disclaimer and warning. And this is prepared by Ideal Financial Group, CAR 299753 of Aruda Proprietary Limited, AFSL 338674 and Adesh Trading Proprietary Limited. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investment. We've made every effort to ensure the accuracy of information at the date of publication. That's why, and there's no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors, misstatements, negligent, or otherwise. The information may be based on assumptions or market conditions and may change without notice. To the extent permitted by law, Ideal's employees, blah, 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 consult a licensed investment advisor and preferably use stop losses all the time. So, what we see here is Westpac with a target at $31.58 or $13.26. We see heavy decline in volume, and this would seem to me to be completed 1, 2, 3, 4, 5, complete. Therefore, it should come back to the fourth wave of lesser degree, which would be $30.26, or possibly $26.33. How does that work? Well, may you ask. But I just want to close a few of these charts down so we don't have to deal with the consequences of their consumption of the memory of the computer. And I want, to me, what we're seeing is really an unwinding of the excessive speculation and the need for dividend chasing that people in the past have had for banks. Higher interest rates mean that dividend chasing is a fraught game. So I think it should come back into here at least, 26.33. And I've been saying I expect banks to have a 20 on them, not a 30, but a 20, like the three with that are in the 30s. Obviously not CBA. If that happens, then we'll really have to all call out the lifeboats for everybody if CBA is back down there. So this is Westpac's count, and we'll just let it run through its own thing. And this doesn't have, really, you'd like to see more data on this, but quite clearly, 1, 2, something. This could be a 3, and we have a fifth of a third, and it comes back. Now, notice here it's gone 3, 4, didn't quite make $41.36. That would have been one of the perfect targets for it on a wave 5. So fourth wave, probably it's thinking $32.34 is where you'd stop out. And it's not giving, it's really not sure in terms of what signals to give it. Let's have a look at another bank, see if we can come up with something more pleasurable than just what's going on now. National Australia Bank. So Westpac, not that flash just yet. Needs to get down into those value areas. Now let's have a look at NAB. Now I would think that this says A, B, C. And that was the fourth and fifth wave of C. Sort of. It said A, B, and C, which would put it higher. However, a breakdown below, where are we? A breakdown below $33 is a sign of badness. There we go. $33 starts to send it bad. Yep, 33. There you go. So below there, notice this is 1, 2. So if you're thinking about buying NAB, you could do so with a stop loss below $33.02. If that breaks, then you're looking down into the heavier part of support around the $26.56 area. Let's pull out a... So the answer is for Westpac, you be careful. For NAB, you can try now with a slight stop. Why that is, I don't know. Now ANZ, you can see here a bit of a fourth wave, so maybe that's similar count to Westpac. Sorry, similar count to NAB. Okay, yeah, okay, Westpac is similar. 1, 3, 4, ugly below $29.98. And where else is there? And the trade's bad below $33.40. No, that's okay. So here, potential little fifth wave. It's not dead, but below $30, and you start to worry about it bring down to $25 for ANZ. Now, CBA. So I'm going to tell you what I think before I do this. CBA is worthwhile buying in the $78 to $75 region, particularly around mid-June and mid-July. Now, CBA, there's some pretty amazing targets up there like 212, 197, and it believes it's 1, 2, 1, 2, 1, 2. So if you're thinking about buying a bank, it's CBA. And really, I'd like $78, but if you are long now and you want to go long, you can also have a stop below $81, looking for those higher targets and be long on a break above $90. So the persistence of trend in CBA is appealing to most people. If you want to get in and go for a run on that one, it's no problem really, as long as you've got to stop at $81 and you can regroup and buy back in around the $75 to $78 area. Okay, so let's have it. We've done ANZ, we've done NAB. Let's do XFJ. So CBA pays the dividend the next time, so it's probably got the most option to get in there. Now, I'm not happy buying the other one, so I'd rather be buying in mid-July for them, but in mid-June for CBA. Now, this is the index. The index is also coming up with some of those similar targets. Okay, so there's a definite problem below 59.53 as long as it can hold above there, and CBA is a big part of the index, so I think that's the one that you want to be focusing on. Now, pattern-wise, run your stop up close because the runner is still there. So yeah, really, when should it come good again? Mid-July for the whole of the banks, and mid-June for CBA. So I'm not a how would you say? I'm not super negative on the banks, but it'd be nice to get one more down move. Now, Gary, you sent me a question. Today was a nightmare, and okay. Good morning, says Gary. As CBA is creeping towards a 52-week low in the US, presently $44.05 against the 52-week low of $40.60, 68. Should we tighten our stops up from? I think you mean down from $29.24 Tuesday, the 22nd of June. Now I'm going to answer that first, and then we'll look at what the machine thinks. Now, I think BHP was down in the whatever it is, and Kim says he's short too. Good volume to the downside, 27.87, not bad area. Starting to trend to the downside. So I'd be a little bit more inclined to make it $29.15, and if you're really keen, $28.93 would be the stop to tighten to. It is trending. 27.87 is the possibility, or down to $27.12. You said you were stopped out on BHP today, made my profit. Thanks for the heads up earlier on. Oh, okay. I'd be putting it in here. Well, it's good you made some dollars there, Gary. But yeah, just up here would probably be the best. You do see a 1, 2, 3, 4, 5. So if you're going to trail it in there. And what I would suggest is 27.87 as holding on if you're still hoping for that one, Kim. Now let's look at what the machine says. Boom, 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 boom. Oh, wave 5. Surprise, surprise. A, B, 1, 2, 3, 4, 5. We have a target down to $17.51. That's a bit ugly, isn't it? That's even uglier than I gave. $19.19. 1, 2. So in theory, if we're in wave 3, your target's $27, possibly $24.39. If you are short, your stop is $34.29. And notice that this machine is coming up with basically the same thing. It says that BHP is in a massive uptrend as long as $20 doesn't break. So if it gets all the way down to $20, it is a generational buying opportunity. And that is the information that the bull.com.au fans did not get. So the readers of the bull.com.au could have got that, but I didn't give it to them because I'm not doing it. So I don't know whether anybody reads that one here. 2284, some sort of target, 1915 on the downside, but this is saying wave 1, 2, 3 is the strongest. So at the moment, manage. I think you can do a campaign in BHP. I do think it's sell worthy. So let's go have a quick look at some of the major indices tonight. Actually, we'll do a count on the E-mini in the US, and got a couple of questions creeping in here, and I'll answer these all using wave counts now. So this is the E-mini, and we'll see what it's doing. I think it should be calling a struggle street pattern up here, a wave 5. Yep, still is, with a 2188 possibility. I don't know where it's trading at, 2104. So we're still short on the PHG trade. If you did get it, then that's good. Your stop probably should be at 2118 now on this one. So that's this is an unusual pattern, but Carl Icahn been warning. I saw in the news that he's been warning that it's not if the stock market collapses, but when. And that's certainly what's going on with this pattern, but I think there's a little bit more time up its sleeve. And it should come back when interest rates start to go up, and suddenly everyone realizes they've got far too many stocks that have been made money because of lower interest rates, not because they're actually good companies. There will be a lot of corporate executives that will go to jail, or at least be chased around. And particularly if they're involved and close to the US government, they won't go to jail. Of course, they won't even get trialed. But if they're not close enough, they will get carted out. Let's do a German DAX event. Let's see a wave count on the German DAX, because that has been one of the fun things to work with. It didn't like that, and I know why. Close. See if it complains. It says no data. Here we go. You see, it feels like a little fourth wave here. Now, these prices have all been manufactured, but notice here it's got 1, 2, 3. So this is 3 of 5. So there's still more juice in the German DAX. The question is where you'd pick it up from, and that's 10,820 area. Similar area. Let's see if there is a personality change in the FTSE, and then we'll just move on to some Aussie stock questions. If you can line them up, whatever Aussie stock questions you want to have, I'm happy to take them. I can't do this with the FTSE, can I? Okay, this is called UKETS-FTSE. The FTSE still has some legs, it thinks. And trouble is it's got so close to terminating. The thing I'd say is it's okay as long as it doesn't break 6900. But it hasn't been a wonderful thing, really. It's saying it's down. If it breaks through 71.23, that would be going. Okay. When you say sorry, not Australian, what do you mean, Gary? I didn't quite get that. Okay, so some of those things. The other one interesting is the NDX, the NASDAQ. Let's have a look at that. Okay, got your code there, Warwick. Now let's see where we can go. $44,4664. Target 39.66. Okay, so it's exceeded some of those and it's in neutral, the old NASDAQ. Where does it start to get worried about itself? Really for a long way down. It's like it's worried about it for a long way if it goes one way, long way. And it's not even giving us wave 2. So this wave count is on drugs. It knows that it's missing some information. Should be better than that. But anyway, this is said wave 1, 2, 3, not sure. Just for fun, let's do a, no, I'm not going to do Shanghai A-shares index. Okay, let's look at a count on the Australian market and see what it's come up with. And we'll remember the XFJ still points higher, so probably the XJO will point higher as well. As you can see, it's been moving up, it's come back and it's sat down on the old tops. It's really not till it gets below 56.36 permanently, like on closing price basis, that it can do anything much. 3, 4, so one more push up, 64.57. One more push up, 60.33. A big push up to 72.07. So machine think it's going higher. Don't be too bearish. I think we should be looking for opportunities at the next round. LNG. Is the Aussie stock and it's short-term long. At the moment, I think, you remember how I said I thought this is good? Look at this, wave 1, 2, bang, bang. It's still good with huge targets, huge targets. Now, I don't want to give you a stop at $1.89, but you might have it at $3.50. But there's some huge targets on this one to the top side on LNG. And I guess they're producing so much that LNG is going to have to, and under contract, that LNG is going to have to make lots and lots of money doing it. So I like it. If you go want to have a technically really big stop, you can buy all the way down to $1.78 with a stop below $1.78. That doesn't sound particularly short-term to you, Erica. If it doesn't, I apologize. But let's drop in, and the 377 is a nice pickup area with a stop loss below $3.58, or getting life above $4.38 with a stop loss below $3.97. In terms of HIL, which is hills, wow, how the mighty have fallen. Shit. Too many dryers out there. Stop at 90 at $1 if it this long term. It's probably going to God, Warwick. So it's not a really bring out you. It's bury you dead. It's probably going to God. Or at 22.5 cents, trending heavily to the downside. Life would get better above 87 cents. That's very sad. Very, very sad. So how can you get out? I'd put a stop loss below 56 cents and hope that it breaks up. Really, it smells like God territory. ORI, and I'm going to hit up I'll hit up a wave count for you there, Warwick, because that's in a good longer term. Really, might have a bit of a bounce, and hopefully you can get out. If it rallies towards 85 cents, you might want to try and get out. Just keep on raising the stop if it moves up. Now, stop loss below $21.42 to $22.42 target on Orica. Now, it's a bank the cash question. We see good volume breaking up. Really, I think you're probably better off having a stop at 2085 and hoping for a break up above that higher $22. You're looking for $24. Just run your stop there. If you're in from lower down, you can run it below $20.08. Let's see on the weeklies whether it is cash banking time for you. The answer is I can't see it yet. And stop here would be below 2080 just to protect yourself, but those $24 areas still looms interesting, and $22.42. If you want a tighter stop, $21.30. OFX. OFX still living down to my expectations of it. Nothing to do, but just expect it goes below $2. Talking of below $2, it sounds like Medibank Private has also done the same thing. It's curious that as they get closer to their dividend being paid, people who are chasing the dividend have sort of given up on it. So it might be the one to watch, MPL. OzForex, heavy volume to the downside. There has been prior support around this area. That will give way underneath 218 and look for 188 on the downside. TON, looking for a pickup in toxic waste. Is it? TON, Triton Mining. No, the other one is toxic waste, isn't it? Well, you're about here right now, Cindy. On a longer term basis, you're here right now. Does a graphite. Here's a weeklies. Yeah, buy it above 35 cents. Break above 35 cents or dips to 25 cents, which isn't that far away, with the stop loss below 22 cents. Not much else on the dailies. We've seen a little bit. Yeah, I think you're in the zone at the moment. Cindy, particularly if it breaks back up. So let's have a look at the healthcare index. That's something else I want to play with. Healthcare index is another index which shows the wave 3-4 with a push higher. So my fears about the healthcare index are probably best put in at below 63.50. At the moment, it's probably wrong to be negative on the healthcare index. So stop below 63.50. Below there, yeah, get negative. At the moment, potentially one more push higher towards 76 something or other. So healthcare index. Oh, sorry, this is the financials. Sorry. Scrub what I just said. Financials I've already talked about. It's the healthcare index I wanted to look at. I have a feeling on this one, I was surprised. I have a feeling this will be a B wave rally on a shorter time frame that it's gone into. So what we're seeing here is it's saying it's wave 3 and there's probably more correction to do in time. See here how long wave 2 costs in time? That was really about 3-4 months in here. Currently it's about 2 months so far, and so there's more churning. So at the moment we've got a bit of a rally, and it probably might go a little bit further, but back down again and then churn sideways before it goes higher eventually. So again, similar implication. Wave 4 is just underway, but there's more sideways movement to go. So if you're long healthcare index as an investor from deeper down area, don't worry. If you're long as a trader, then you want to try and buy dips, looking for it to go up eventually, but not getting too excited about it. What about the telecoms index? And I'll do the gold index. Gold prices. We'll have a look at the gold index. You see a little descending triangle in the telecoms index, but it's not dead fully. Notice here it said 1, 2. It feels that the fifth wave was complete of wave 1 on this area, 1, 2, 3, 4, 5. And that probably the best area to think about is $16.11 and $12.79 on the downside before looking to buy. And we'll have a look at XGD and then we'll go to bed because it's 10 o'clock. In Sydney and Melbourne and Brisbane and Tasmania, Hobart. And Perth people are probably just smiling because it's 8 o'clock. One, two, three, four, 5 on the downside, A, B, C. So what this is saying is gold. It's saying this is A wave and it may be doing a wave W and B wave down to this area here. I'm okay with that because even if gold makes a new low, the Aussie dollar probably will compensate for the fact that gold's going down. So another dip in gold would be buying opportunity on the gold index for a rally up to say 4,600. Now, can I say it's all good? Notice that it still thinks it's going down, but if it breaks 22.50, then it's got some problems, or 25.53, which isn't that far away. What was the height? What was the close today? 22.23 wouldn't be. Serious? No. 26.78. Let's have a look at it the way I normally look at it. Just sitting there like a dullard, really. If the Aussie dollar goes up and gold goes down or stays the same, maybe that will get some common sense, but I can't see it happening now. Notice how it's falling all over each other. And it would just take one of the promoters, because it's been heavily promoted to the general public that you should be buying gold stocks. Maybe that would be the, if one of them turned on it, that would be the first sign of death. Okay, do we have any other questions, or shall we hit the ground running? Right. Night, Gary. Night, Mark. Have a good one, everybody. Kim, Judas, Ziggy. See everybody. I'm going to be rude and close down because I'm actually a bit whacked. Have a good one, everyone. Cheers, bye.